Hi YouTube, episode 6 now of my portfolio, Freetrade Portfolio Updates. This is the DIY Investing Guy channel. I'm Callum. If you're new to the channel, please subscribe and smash that like button to help this channel grow and get this video out there. So there'll be a link in the description of this video for a free share if you sign up with Freetrade. You just got to sign up through the link, deposit your money into the account, and you can get a free share worth up to £200 if you're new to investing, and that'd be a great start to your investing journey if you've got a free share worth £200. I'm going to try and do a quick update today. Obviously I'm going to try and do weekly updates on these now, just go quickly through it. Any news in the companies that I own, anything that I've bought or sold, the risers and fallers, so what's rose this week and what's fell this week, how the overall portfolio performance has been the week, and then I'm going to have a look into some insights into the portfolio, like my asset allocation, what sectors I'm invested in, and then the performance of my portfolio, weighted performance and unweighted performance of my portfolio since I opened this account in the last couple of months or so. Let's get straight into it then. So obviously since last week I have brought one new company, and that is the Naked Wines. I did do a video on the Naked Wines, so I won't go too much into detail into this company. It is just it sells wines online. Basically, it sells them to parties, it sells them to people, customers. It sells them you can have them delivered to your house in a box, or you can have an event and you can have wines delivered. It had some negative news. Its trading update was good in terms of its growth, but its losses widened because it obviously invested heavily into customer acquisition, and obviously I think it gives vouchers away for new customers to get free boxes of wine or £100 worth of wine or stuff like that. So, and it's looking to do that again this year. It's grown really fast in the United States, North America, and I think that it's going to have another year of losses this year from what analysts are saying, but the losses are going to get smaller, and obviously they're going to acquire more customers. So this is like a 2-3 year play, hopefully. If there's no real improvement in the bottom line in 2-3 years, then I might look at reevaluate my position in this company. It's in the last 7 days or so it's dropped by 12%. Obviously I got in at a cheaper price than $7.93. I think I've got in at just about $7.15 a share, and it's gone down to about $6.84. Obviously I'll be looking to buy more of this company every month, just buy £100 worth of this company while it's still going down. I wouldn't mind an average price between £5 and £6 on this company. Simply Wall Street have got it valued at $2.50, but I think that's its current value. I think it's got a lot of potential upside in the future. So here it is. I've brought 13 shares of this company. £94.59 I've spent on it. My average price is $7.27 a share, and I'm currently £5 down in this company. So and this firm that supplies various wines throughout the UK and the US and Europe. Customers have the option to purchase by the caseload or individually, and that's in the food and drink industry. So I can't really say that's one of my risers or fallers this week because I brought it midway through the week. So what I'll be looking to do with each of these companies is I'm going to dollar cost average into these companies, or pound cost average, which means put the same amount of money into each of these companies every month when I get on payday. So split it between these 5 companies, and obviously I've got Alibaba in my general investment account. However, if the price is shot up, or I think it's not a good fair value anymore, or I'm not trying to average my price down, and I'm constantly averaging my price up, I will stop buying certain companies. Like for instance, I've got a decent sized position in Tattooed Chef on Facebook now, and if the share price keeps on appreciating, I won't be averaging up every month. I'll just keep that money as cash in case if there's any future opportunities in these companies, or I'll find that the other 3 companies in my portfolio are really cheap, or have had a bit of a dip in the share price, and I'll double up on the pound cost averaging into those companies instead, like Boohoo, Salesforce and Naked Wines. So I'm just going to have a quick look at, first of all, my risers, my fallers. My biggest faller for the week is Tattooed Chef. Obviously it's had a good run of the last few weeks, and this week it's 5% down, and it's now $21.87. It was about $23 a share at the start of the week. So yeah, it's 5% down for the week, so that's my biggest fall of this week. I am still currently 15% up on this, so I've got a good average price on this of about around about the $18 mark. So in this portfolio, so I'm quite happy with that at the moment, and I won't be buying any more until the company is below $20. But so I will buy more of the company if it goes sub $20. But yeah, so it's my biggest faller for the week, but I've still got a healthy gain on this position. And then I don't think I've got any more fallers for the week. Then I'll just go through the 2 new positions that I showed you last week. Was Salesforce in the last 7 days. That is 3% up, so that's had a pretty good run. It was about 5% up at one point. It was $246 a share. And I'm currently sitting on a £2.48 profit, 2% profit on this, with an average buying price of $167 a share. But as it's only a baby position, I've only just started it with £100. I'm not really fussed if it's I wouldn't be really that upset if it went down, because it means I can start buying my next round of investing next month. I can buy more at a cheaper price. Obviously, till I've fleshed out my position, like till it's the size of a Facebook position or a Tattoo Chef position, then I'll probably want it to start kicking on a bit then. But it's going to be one of the core positions in my portfolio, like Facebook. Then the other company I've got is Boohoo, and it's just had a great earnings update, obviously. My average buying price in this company is $3.21 a share, and it's currently sitting at a 3% increase, £3.27, £3.27 up. Obviously, this is also a baby position, but in the last 7 days, it's appreciated by 1%. I'll be happy to keep on buying this company all the way up to £4 a share, to be fair, because this is going to be a real long-term play, and it's going to do really well in the future. I think it's going to be worth, it's just brought dividends. It's constantly showing great signs of great trading updates, great results. It makes quite a decent, healthy profit. Its profits are increasing, its revenues are increasing every quarter, and even with all the negative news, it doesn't seem to affect what the customers' opinions of it. The customers still keep on coming to buy it. So even with all the negative news in the press and the media, it's got to be a beast of a company. I think it's got a good brand, and it's very popular with the 16 to 30-year-old shoppers. And obviously with Debenhams, it's just going to open up a whole new range of customers to its platform. So I think, yeah, I'm going to build a position in that, and I'm happy to buy it all the way up to £4 a share. I mean, 2 years ago it was around about the £3 a share mark. So, and it's only grown in them last 2 years. So I can't see why Boohoo I can't buy any more of it. It's obviously 1% up this week, in the last 7 days. So that's my portfolio. That's the risers and fallers. Obviously, one new Boo share, Naked Wines. And obviously soon, in a few weeks, I'll be getting a payday again, and I'll be averaging into some of these positions, and then obviously holding, depending on the share price of other positions, holding some in cash. So yeah, I'm just going to show you now an insight into the portfolio as a whole. Obviously 98%, I'm fully invested in this. I don't hold much cash in it, because the way I see it is I can instantly inject cash into this account. I can do it so I leave most of my cash in my bank account now, in my savings account. So if I need to put any money into my brokerage account, I'll just transfer it straight over. So I don't really hold cash. Once it's in here, it's more or less fully invested into the stock market. So cash is only 1.6%, and then stocks is 98.4%. Don't hold bonds, don't hold commodities. I just enjoy researching companies and buying companies. So that's what I'll be doing in this portfolio, this stocks and shares portfolio. And then by sector, obviously you can see my portfolio performance since the 17th of May 2021 is 10.77%, which I'm happy with. By sector, it's 48.8% is the highest in food and drinks, which is Naked Wines and Tattoo Chef. Now, I work in retail, so I understand this sector quite well. I've worked in it for 15 years. That's why I like these 2 companies that I'm invested in, and I understand how they're going to make money, and I can see that they're quite good companies, to be honest. Obviously, the tech sector, which would be Facebook and Salesforce, I understand both companies, and they're in my portfolio, and I think they're going to both be beasts of companies in the years to come. And then fashion obviously is Boohoo, and obviously Boohoo is an easy company to understand. If you look at all the companies I've got in my portfolio, they're quite easy to understand, and I understand them, and that's why in my portfolio. There might be better growth prospects out there, but I don't understand the company. I don't understand how it makes money. I don't understand how it's going to make money going forward. So that's why I haven't brought into these companies. And one day I might, with a bit of further research, but I'm just trying to stick with, while I'm building my portfolio, is what I know, and it's one of the common themes with many investors that I've found in the last couple of years is that the best investors in the world always say invest in what you know, and what I know is food and drink. And obviously for Facebook I use, and obviously Boohoo, I understand that, and I know a lot of people that order from Boohoo. I'd order from Boohoo to myself, to be honest, generally. So it's an easy company to understand. So yeah, and then I'm going to just look into the portfolio performance then. And as you can see, the money weighted return. So this is quite a good little feature. So you got your 1 month at the top, and then you got your time weighted return. So the money weighted return is your investment performance, the return on your account, including the effects and deposits of withdrawals. So this is what my account would look like. So say if I sold a company and then took £100 on it, it would still calculate my percentage return, which is quite a difficult calculation to work out. So he's doing that for me. But obviously I haven't took any money out of this, and I don't really want to be taking money out of my ISA, because my ISA is like one of my most important financial freedom accounts for the future. Time weighted return, the performance of the market value of your portfolio over time. It excludes the effects of deposits and withdrawals. So this will show me what my portfolio would be like. So say if I sell my Facebook position, then withdraw all the money, and then in 12 months time Facebook shoots through the air, shoots through the sky, and it's 100% up. It would show me where my portfolio would be if I had not sold Facebook. So I don't know if this is really a great one, to be honest, because it might make me look at it and think, oh God, I wish I hadn't sold that, or it's just a constant reminder of selling out maybe a potential 10 bagger. But yeah, against the market, which I do like this one, because it's weighing up your performance against the market. So my investments at the moment are 14.8% up since in the last month, whereas the FTSE All World ETF is 3.3%. So I've outperformed the market in the last 3 months. So I do like that aspect of it, because it showed me if I've outperformed the market, that particular market. So you can do the 1 week graph then. So I'll probably show you the 1 week. I'm minus 2% down this week on my portfolio weighted return, and I'm 1% down with a total time weighted return, and that's, I haven't beat the index this week, the FTSE All World ETF index fund this week. So I'm currently 1% down nearly, and they're only 0.4% down. So that's a good little metric there to assess. I'm not really bothered about the 1 week if I've outperformed. I'm looking for the long term. So we'll have a look at the max since I've started investing. Sorry, the camera just dropped there. And I'm 9% money weighted return up since I began investing. And I've outperformed the market by about 5 basis points. So I'm 7.3% up, 38% up, and the FTSE All World ETF is 2% up. And I think that's the best measure to measure my portfolio against, because I hold UK stocks, I hold US stocks in this portfolio. So if you look, I've probably got quite a bit of a growth portfolio, because when the market's on a rise, I tend to outperform the market. And as you can see here, in the middle of May, when the market was having a bit of a downturn, because of the fear of interest rates and the fear of inflation, and obviously the high growth stock sell off, my portfolio was actually underperformed the market. But I did hold a few more higher growth stocks in this period here, lots of DraftKings and Skills, so that might have pulled it down a bit, because these were and Tattoo Chef wasn't really having a great time then either, was it? It was just, I think it was about $15 a share, $16 a share. So yeah, my stocks tend to underperform the market in downturns and outperform the market in upturns. So yeah, and as you can see overall, so I think over the long term, because I've got some pretty solid companies in there, I'll outperform the market. So yeah, that's quite a good little metric for measuring my performance against the market. So let's go back to my portfolio. So yeah, this week I'm currently £2,536.35 in my ISA portfolio. I will quickly go through my general investment account in a minute. and in the last 7 days, it's pretty much it started about nearly 2,600. Obviously, my last portfolio update, and in the last 7 days, it's dropped a little bit. I think that most of it, the thing is Tattooed Chef being 5% down, as that was my largest position. Obviously, Tattooed Chef had a bit of a boost yesterday, and the price went back up, but then obviously it dipped back down towards the end of trading yesterday. So yeah, it's not really done much. It's down about £70. And I'd say the majority of that is the Tattooed Chef position being 5% down this week. Most of everything else has pretty much stayed there and thereabouts. So let's just have a quick look at my general investment account. Just quickly have a look in here. Yeah, I've had two new free shares. I've got SMFG, which is a Japanese bank, and Coty, which is a health and beauty company. So I haven't sold them yet, but I probably will just sell them shares and keep them as cash until I build up my free shares, and then probably buy a bit more Alibaba or whatnot, because Alibaba's share price is now $210 a share, and it's still vastly undervalued. So we'll be obviously dollar cost averaging into this company next month as well. I'm buying £100 worth of shares into this company. I currently hold 6.9, nearly 7 shares of this. My current value is just over £1,000, and I'm £52 down, nearly £53 down. It's nearly 5% down. So it's my worst performing stock in my overall portfolio, but I think it's at a massive discount at the moment. And I think just give it a few, well, I don't know, hopefully a year, but a bit of time, and it'll be worth. It'll rise to its true value, which I think is anywhere between $300 and $350. And as you can see, I've been buying and aggressively buying as the prices have dipped on this one. I think I've got an average buy price of £156 a share, which is just under $220 a share. So I'm happy with my average buy price on this one. It's only going down at the moment, my average buy price. And my 7-day, yeah, I've lost about £40 in this portfolio this week, because I think Alibaba was quite level. Obviously, I'm £120 down in the portfolio since I began investing, but that was last year as well, and I lost a bit of money on a few investments, which I think Huya I had in this portfolio didn't do that well, and I put all that money back into Alibaba because I was more bullish on Alibaba for the long term. So yeah, that's my overall portfolio. I hope you've enjoyed this update. It's been a bit longer than I wanted it to be. If you want a free share, obviously, like you've seen, I've got the 2 free shares there. Follow the link in the description, sign up to Freetrade, deposit some money in the account, and get a free share worth up to £200. Thanks for watching. Please subscribe to the channel, smash that like button, and drop a comment. Drop your thoughts on my portfolio, anything you think about the companies, if you've enjoyed the portfolio update, any general feedback, any questions about the portfolio. Please drop a comment. Hope you all have a good day.